Lockheed Martin Corporation long-term analysis 2025-2027. But before that, guys, remember the disclaimer right here in the video description below. I gotta tell you guys, this is very interesting stuff because we are watching right now the support level long-term analysis, guys, that started back in 2022 February, just at the beginning of the conflict, and then the net income, how it reacted over the last couple of years, completely insane. In that sense, it's steady. The revenue, because of that war and other just countries buying military equipment, it was steady. In that sense, until the last quarter. In December 2024. It was completely unexpected, and actually, if we go to the forecast, you can clearly see what I'm trying to explain. Because it's completely insane how the reporting was completely downsized. In comparison to the estimate. In that sense, like we had a reporting of 2.22 in the EPS, and the estimate was 6.63. So something happened definitely out there. But right now it's like, okay, should I be worried about that? Because the estimate again is very similar to the previous one. Could it happen again? I don't think so. Let me explain why. Because right here, at this particular level, and actually this is a very good area to buy. You think about it, just in terms of technical analysis. And the thing is, like Europe right now is increasing the military expenses because right now they are kind of alone. In that sense, we don't have the United States backing them anymore. So obviously they are forced to increase these military expenses or just to face uncertainty, because anything could happen. And when we're talking about territories, when we're talking about geopolitics, you gotta be careful about that. I'm pretty sure they are kind of scared right now because without the support of the United States, Europe is kind of weak in that sense. This is more about geopolitics, but what I'm trying to tell you guys is like they're gonna increase that in order to protect themselves. If that happens, Lockheed Martin Corporation is one of the companies they're gonna buy, and they're gonna buy stuff from them. So if that happens, the revenue is gonna increase again, or very similar to those numbers actually. But if they continue to increase the expenses, the military expenses, this number, the net income of Lockheed Martin, could be like increased in that the exponentially as well. A lot of things are gonna happen in 2025 actually, because we have this Trump that is gonna sign like a peace agreement with Russia, and then Ukraine, and we don't know exactly how they're gonna react, because that's the reality. They don't want to agree to that, but they're kind of forced because they don't have the support. They don't have the money back in Ukraine anymore. And that's the problematic thing. They are forced to accept these conditions, or they're gonna face like a very bad situation for them unless Europe continues to back them with more military equipment. If that happens, in any case, this company is gonna be benefited from it, because at the end of the day, they're gonna buy stuff from them, and that's the thing, guys. And let's talk about again the forecast, because we have like 19 analysts from Wall Street. The average is plus 21%, and this is the interesting part because it's a little bit, according to them, oversold. And we're gonna actually use the RSI and MACD indicators, which are probably the most popular indicators used by everyone. And you can clearly see, that the technical analysis is also signaling like oversold territory. Normally, I usually buy at the bottom of a company, in terms of RSI and MACD. These areas are the best in terms of risk because you buy at these particular areas, and the rebounds tend to happen, and they are very strong. So look at the last time it happened. Right here, the RSI at oversold territory back in October 2023. The MACD also completely oversold. And then you buy at that particular line, that particular area. Look at that. We're talking about like a more than 50% of an uptrend, with almost no risk in comparison to the past, And then if we include the dividends, we have to add the ADGA, and the performance is a little bit better. We're talking about maybe 60% almost. That's the thing, this company obviously you won't experience like a huge upturn of more than 1,000%, 2,000% in just 1 year. It doesn't happen in companies like this because we are talking about the market cap of 100 billion, more than 100 billion. Anything can happen in the future, and of course, this could be like in the future a 1 trillion company, but not at this point. At this point, it's an oversold territory. You can buy at this area, at the bottom, which is in terms of risk management it's a good strategy, you know, like buying at the bottom or at the bottom of the RSI and MACD, and then in the support line you have like 3 indicators signaling oversold and good risk management, you know. And that's the thing. There is another indicator I'm gonna show you because I really like that one as well, which, you know, it helps you to assess exactly how much you are risking in a position in comparison to the upturn you can get, you know. So obviously, like a worst case scenario, obviously it's very difficult to predict, but maybe imagine that we see a breakout right here, and the stock starts to go down. Okay, so maybe the possible scenario would be like this support level right here, and I'm gonna draw it. This would be like the next area. We're talking about like a minus 20%. Okay, this is long-term analysis. It will be like trading around these levels, you know, the bank established back in March 2020. At this point, the uptrend could be at least, you know, to make new highs, maybe again. So we're talking about 2 to 1 risk reward ratio, you know. So yeah, this is the risk we are taking when investing in the company. I think it's manageable, you know, this because the thing that I wouldn't recommend is to buy a stock, you know, to, you know, get like 100%, but you're risking also 100%, you know, doesn't make any sense. Like a 2 to 1 is good enough, you know, that's the thing. Okay, so that's the analysis, the long-term analysis of this stock. We're going to end this video with the seasonals because how has this stock been performing over the last decade, you know? And this is very interesting because it gives you a perspective of what it could happen, you know. And that's the thing. I just loaded like a lot of years from 2008. That was a huge crisis actually, till today. And here you can clearly see all the years at the right area of this chart. And this is very important, guys, because you are going to assess how many years are ended in negative territory. You know, we're not including the dividend, but it's like maybe there's a small gap. You know, we're talking about like instead of minus 5%, it could be like a minus 3, minus 4.20, something like that in every year. And that's the thing, you know, we're talking about like the worst case scenario was 2008, minus 20%. And that's the risk that I just read before, you know, with like a risk ratio of maybe 1 to 2, 2 to 1. In that sense, you're risking 20% because actually that was the worst year of the company. And it was back like almost 20 years ago. Maybe the trend is different right now. All the years that are very like, they were kind of negative, minus 17, minus 11, minus 11, minus 9, minus 8, and then minus 5, you know. Actually, one of these years is the current one, and the other one was 2023. So in that sense, we don't expect to see many negative years in the coming future in the stock because the rest of the years are super positive. Actually, we're talking about the best year was in 2013. Almost 60%. So every year is like actually this is a very good stock in terms of yearly performance. You know, maybe there is like a bad year, but the rest of the years are very, very high. We're talking about trading above the S&P 500 definitely many of these years. You know, so I think that helps you a lot, you know, with this video. Remember, guys, if you want to find more information about the company, you can check the description in the Google. You can find out exactly what the company does. But I can tell you guys, it's like they focus in aerospace. It's an aerospace company, and they engage in research, design, development, manufacturing, integration, and sustainment and technology systems, product, military, in essence, you know. So you can get more information if you find out on the internet. So thank you very much, guys, and see you in the next video. Subscribe to Trainer Stick to watch more content like this, and see you in the next one.